What's going on, guys? Welcome back. It's Evan again. Today I'm going to be showing you guys how to pick a good stock. This is more so just a reference on how to pick a good one. It doesn't have to be your first stock or second stock or anything. Again, this is just kind of a reference on things to look for, things to be aware of, and how to pick a stock that's going to make you money in the long run. Unfortunately, I live alone, so my guest will be my brother. He's on FaceTime right here, and he'll be watching the speech as we go along. The benefits to me, I enjoy the passive income. The passive income is nice. That comes in with a dividend stock that you get paid, which I'll get into a little bit later. It also just investing in your worth. Over time, your worth grows, and you want that. So you can double your investments, you can triple your investments, but you can also lose money. So this is why you got to know what stocks to look for. I've been in both situations where I have made 100% profit off a stock, and I've also had times where I have been sitting there holding the bag. Luck and coffee. Yeah, not a good time. So that's why it's good to be educated on what stocks you need. First thing you want to look for in a stock is its PE ratio. So the PE ratio is the ratio of a company's earnings to a company's share. So how much they're going to make off of your purchase on the share. I'd say a good number is anything above 10. Under 5 is a dodgy company. I would avoid that. Everything above 5 is about an average run-of-the-mill company, and then everything above 10 is, I would say, a quality company. Your blue chip companies, your Apples and Amazons are well above that, but your blue chip stocks that'd be a good place to go. Anything above 10. Next, you want to look at your dividend yield, which, depending on what kind of investor you are, is a very important thing, because you have different kind of investors. You have the day traders who hold a share for 24 hours. If that just the trading the day, they'll grab it in the morning in a high quantity and will sell it in the evening for a profit. So if you buy 100 stocks and over the course of the day they all gain 50% on that stock, then you're going to have a mighty big profit by the end of the day. But it all depends on what kind of liquid assets you have to put in at the time. Myself, I am a long-term investor, a positions investor, where I will just put in money over time into the companies that I believe in, and they'll pay me back in dividends, which is your dividend yield. It's a percentage of your share that the company is willing to pay you back over time. So 4% is kind of an average where I kind of stick around. And so if 4% of a stock is paid back to you every year. So every quarter you won't get 4% of your stock, but you'll get a portion of it. So your 4% over the whole year, then divide that by 4, and you'll get your quarterly shares when they pay out their dividends. Each company is different though. Companies pay them out monthly, quarterly, yearly. That's just doing research on what companies that you're investing in. But the dividends can add up. So say you get $1 dividend every quarter per share, but you have 100 shares, that's going to up your dividend, meaning you're going to get as much money as you put in out. So yeah, dividends are how I like to invest as of now. It's a good way to get passive income. I don't have to do anything. I just hold the share in my portfolio, and it pays me out over time. Granted, small increments, but this is a marathon, not a race. So it's going to take time regardless. The volume is another important thing to look for. The volume is going to be how much that stock is moving around. If it's moving around a lot, that's probably going to rise the price up, versus if it's not moving around a lot, people aren't sought after it, it's kind of going to come back down. But that's a better time to buy it. You buy low and you sell high. So yeah. Market cap is another one. Market cap is basically all the shares that company has and how much those shares equate to, basically how much they're all worth. So you want to stay in the millions and billions. I think hundreds of thousands are a little dodgy company, but your trillions are your Apples and your Microsofts. So those companies are a little more hefty to invest in, but your return is going to be greater in the long run. An example, if I had to do an example for you guys, it'd be Coca-Cola. So Coca-Cola and Ford are two powerhouses that we all know of. But which stock would be better to invest in? Financially, some people would think Ford because they sell more expensive products. They sell a high thousands of dollars in trucks and thousands of dollars in cars. Coca-Cola, what do they sell? They sell like 99-cent cans. But Coca-Cola is a much more reliable company to invest in than Ford. Coca-Cola has pricing power. That is a very important thing. If you think about it, Ford has a truck for $40,000, and the Chevy has a very similar truck for $35,000. Individuals are going to be looking at that for the fuel economy, for the mileage, for this, that, and the other. They're probably going to go with the cheaper alternative just because, yeah, they can. They have that option. But with Coca-Cola, if you're looking for a Coca-Cola and you have a Pepsi, you're going to want that Coca-Cola. The Pepsi's not going to scratch your itch for a Coca-Cola because you know exactly what you want. They can price their product at whatever they want, and their customers will still consume it, regardless of competitors. They have pricing power. They have future sales. Future sales in the next 10 years. Will people still buy Coca-Cola? Yes, they will. And they're consumable. They have to come back every so often and keep getting that Coca-Cola, driving that price up. Ford, you buy a truck, you keep it for 10 years. They don't get any profit off of single consumers. Brand recognition as well is a huge one, and brand recognition is very important. And Coca-Cola, they run that. So yeah, that's pretty much just a little brief overview on what to look for in a stock. It's very dependent on how much you invest, if you invest, and if you do, contact me and I can get you a free stock on both Robinhood and Webull. And if you guys are interested in getting started, I can talk with you guys one-on-one and get you guys started as well. So that's it for me. And give him one of them little waves again, because that's all you do. But yeah, you guys have a good one.